Hey everybody, Preston Brent here with our trader user group, Wkly Round-Up. This is for the trading week ending August 12th, 2016. Well, I'm still over in Europe. I've left Zurich and now I'm in Vienna. I'm doing a couple of seminars here. As I said, while in Zurich, people love currency markets, and I can't blame them. It's been very interesting to say the least. I think I'm coming down with a bit of a cold here, but hopefully a lot of hot tea will get rid of that. Maybe put a little bourbon in the tea. That'll make it even better. Um, what I've got on the screen here is the S&P 500 E-mini futures. If you guys have been following me in this free weekly update, you'll know that we're pretty much right on target where I thought we would be going, or at least what the charts said we could be doing, the most likely move. You can see on this chart right here, on this daily time frame, I've got it fairly well condensed down. And you can see there is a pattern here of a 3-leg, a 4-leg, and a 5-leg here. Now, I don't use Elliott wave theory to trigger a trade, but what I do like to use it for is just to give me a general inclination of, are we going to start forming a topping action? You know, what is the Elliott wave count supportive of other indicators that I'm using to help base my trend bias? And when they are, it just adds to the mix. Okay, I don't believe in putting too much on the chart. I try and stick with a lot of the basics, primarily volume and price, also time, and key pivot points. And you will find that that pretty much helps define where we think the market is going to go, where I think price action is kind of depicting. You can see right here, 2037.75 was the opening price on 2016. And you can see we spent a lot of time below 2016 in the opening price. Okay, the beginning of the year was somewhere right in that area there. So we started off, and this was February. We got a long signal down in this area here, and I said, let's get into it. And then we had a great run up. I mean, just a really great run. A little bit of a pullback here, not much to speak, a little bit here. Then we had the Brexit vote, and we came all the way down, but then we just came back hard up. And all the while in this move up off of this low here, I was calling for around a 2200 area here that would give us the topping action on an Elliott wave 5 leg on this up leg here. And you can see that there are a couple of things that I've left on the chart here that I think we need to just revisit here for just 1 minute. The first thing I want to do is show you guys the prior all-time highs. 2134, you can see I've got right here, excuse me. 2134 is where we were at former all-time highs for over a year and several months, over 400 and some odd days. And then we finally broke clear of it right in this area here. Excuse me. So we just broke clear of that off the Brexit vote, and we just came right up and went charging right through. And again, that fit in with my target here of around 2200, not because 2200 is a magic number, but because this this colored bar here really represents a combination of Gann and Fibonacci extensions. Fibonacci extensions to the upside for price, and Gann time extensions to the right-hand side of the chart as far as timing. And it had called for around the 2200 level as early as 8 August, extending into September, October timeframe. But we really cleared it very, very quickly. In fact, so quick that I believe we are due for a little bit of a settling in here. We have officially hit the target of 2185.25, which is now our all-time high. And I would not be surprised to see us come up and test or do a retest of former all-time highs. In fact, what would make me feel better, excuse me, what would make me feel more confident in this market would be to come back and test these all-time highs and then spring up to make higher highs, okay? The other thing that I'm seeing on this daily chart here, and it's very faint, but it is here. You can see here as we've had these highs, right in this area here, like this, which it was fairly constant, right? Pretty flat. And then we made these highs here. you can see as I draw these topping actions on the MACD here, that it is clearly, unmistakably going down like that. So that gives us on a daily chart what we call in our group a BED, a bearish divergence. These bearish divergences are probably even more accurate than bullish divergences, and it shows that we can expect some price weakness. Now, for the past almost 3 weeks, the markets have just been in this crazy grind mode. And I know it's driven a lot of traders crazy. If I blow this up here for you, just to give you an idea, let me just kind of move this in a little bit, and you can see here on this daily chart. And I'm using my notebook PC here to do this. So it'd be easier on my desktop. I don't have the right drawing tools for that. You can see right here that we've just been in this very, very tight range here, okay? And we poked our head up and made 2016 all-time highs on Thursday, and then Friday we were still relatively flat. So, and we're seeing a little bit of slackening in the MACD, but this does not represent on this close-up time frame really much of a divergence. This right here is more of a consolidation pattern. And it would suggest that the markets can go higher. However, if we break this lower area, we will test the 2134 all-time high. The other thing that I will say on this daily chart here, let me just get some of these things off my screen here for a second. You'll see that I have a big price area or volume area here and a much smaller but still significant volume area here. This is volume over price. So you can see why there's just a lot of money changing hands at this level, and there was a pretty good bit right here as well, which represented a combination of buyers and sellers, but buyers won out right here, and right here it seems to be a standoff, both buyers and sellers. I think the markets and price action is looking for a catalyst to move higher. Keep in mind that in 2 weeks, Janet Yellen is going to speak in Jackson Hole, Wyoming. It's an annual economic summit conference that a lot of finance ministers attend from all over the world. Yellen's going to get up there and speak. That's August 26th. That's week after next. And of course, anytime Aunt B talks, that can move the markets higher or lower, depending. Can't really rely on that. I do believe that we're going to be in this choppy, tight pattern here. And any pullback is probably going to be held up by either the 2134 area or the 50 EMA, but they're fairly close together. So that is, not that far south from where we are now, a little bit under 45 points or something like that. So I don't think we're going to go much lower than that until we get a catalyst. And I do believe that in looking at the percentage of stocks over their 50 and 200 EMA, we've got fairly good support underneath us for now. I'm still sticking to my story that the markets are going to have a 25 to about a 37% pullback in the next, let's say, year and a half. And again, I don't know what the catalyst is going to be, but that's kind of what I'm seeing right now in this pattern. If we take it out to a weekly chart, I'll show you how I generated that 2200 price target. You can see right here on this weekly chart, what I did was I took the Elliott Wave 3 leg here, and then a 4, and then a 5 here. So on the daily chart, we had a 3-4-5 within an overall larger time frame 3-4-5 pattern as well. Okay, so on the weekly time frame, here is our 3, 4, and 5. On our daily, which this is a weekly chart, we had a 3 leg here, a 4 leg here, and then a 5 leg right here. So we've got this double pattern set here. So this does suggest that we're going to be, and again, I use this pivot high right here and this pivot low right here, that move right there to calculate that move right up to this area here. And I just don't see us getting much higher than that. There is no divergences down here to speak of, both bullish or bearish. There were a lot of massive divergence leading up to that pullback right here. But we've made new pivot highs, we've made new higher pivot lows, right? We had a high here a low here, a lower high here, an even lower pivot low there. So that would suggest that this move up here, we didn't take that high out. We came down, we made another run, and we took it out. And then we completed the process, and we made brand new pivot highs. So any low, the thing that I'm going to be watching for, I'm going to be looking for the 2134, but the key pivot low for me is going to be sitting right there on this daily chart. All right, so that's right around 1980. As long as we stay above that, we're not making new pivot lows or lower pivot lows. And even though it's about a 100-point difference from where we are right now, I mean, you can cover 100 points really quick in the scheme of things. That is going to be my definition right now of any pullback here is probably going to be bought. But if we take out 1980, then the decks change. Let's rearrange the chairs and let's see which way we're going. Okay, so that's kind of how I'm looking at this right now on these charts here. And it's important that we spend time on these so that you just understand. Keep in mind that the markets have been in a sideways pattern for a very long time. And when that happens, you know what else happens? The VIX. If we look at volatility here, and let's take it back to a daily chart so you can just see this thing. Looking at volatility, and let's just blow it up a little bit. You can see just how low we are. We're near the 2016 lows. We made the 2016 lows here back on the 9th of August, so last week. And we ended Thursday and Friday with volatility falling, not going up. It actually went up through Wednesday. We actually saw a 1241 print, and now it's back down again, and it closed at 1155. Still extremely low. Any vol under 15 is what I call our zone 1 vol levels for credit spread traders, meaning you do not want to have more than 25% of your capital tied up in credit spreads, because vol is susceptible to moves higher, and the risk of a higher move can hurt you more than a lower move in vol. So you want to keep a lot of your capital at bay or doing other types of strategies like we're doing in our group. Now, for our members, we've got a session tomorrow night. I'm going to go into what I put out there in our secret trader room, which is what I call the accordion fly, and then the broken super fly, and then the broken baby fly. I'm going to go through each of those with you guys so that you can see. If you're not a member, highly encourage you to come in and check us out. We're getting a lot of folks coming in and enjoying some of the things that we're doing here. So we got to take advantage of what the market gives us, not what we would like to see. All right. So again, you don't trade what you like, you trade what you see. And that's kind of, I've heard other people say it, and I would agree with them. If we look at bonds started down, and then they just had this nice little move, and they're kind of still sitting here, as you can see, over 170.28. You can see this upsloping trend line, this green line right here. I do believe that this basic trend, generic trend, is still intact. If we take out 170.28, I think it'll move down a little bit lower, but we've still got a lot of juice, I believe, left in the bond market. We've just got money flowing in from Japan and Europe, primarily from Japan, coming into the U.S. bond market. So that's keeping our rates fairly low right now. And, to Janet Yellen's wonderment, I guess. So that's kind of where we're sitting. If we look at the yen typically moves up in times of global stress and down when things are looking better. You can see here the yen clearly has been moving up, even with all of the stimulus that the Bank of Japan has been putting out there. And it finished on a strong note on Friday. And you can see the U.S. dollar was down just a little bit Friday. We had some weak data come out, but it's still fairly strong. The chart is suggesting here that there's going to be more downside action in the U.S. dollar near term rather than upside action. And I'm also short the British pound. You can see here my target on the British pound after the Brexit vote. We're just slowly coming down, and I'm looking for it to come down below the low that it made after a week after the Brexit vote. I'm looking at it to come down around 126 area. And then I'm going to be interested in going long. I think the British pound is going to be a great long as we go through this year. Great long opportunity, rather. If we look at gold, well, gold finished the day on Friday down as well. You can see right here, we're still in kind of a range-bound mode, not quite a bearish divergence, but it does suggest weakness in gold. As long as gold holds up over 1306, I'll be happy. If not, I'll start to take some of my profits out of silver because I'm also in silver. Silver had a little bit of a worse day than gold did, but we're still above 1928. Now, most of you guys that are members know I've been in silver since silver was down around the mid-13s, and I've just been following that to the upside. But if we break 1928, I'll probably start taking some profits in silver. Oil, well, this is like Charlie Brown all over again. OPEC came out and said we're probably going to meet sometime next month in an unscheduled meeting to see if we can all agree on some kind of production status to equalize the price of oil. I don't believe any of that stuff. Do I believe they want to meet? Yes. But will all those guys get together and agree on something? Well, first of all, Saudi Arabia hates Iran. Iran hates Saudi Arabia. Those are the two major players. Iran is still coming back online with the oil that they couldn't sell for many, many years when they were under sanctions. Now they're trying to get as much oil out in the market as they can. There's still an oversupply of oil. So unless these knuckleheads come to some kind of production freeze, which I doubt, we're going to see oil roll back over again. I don't think oil is going to get much higher than 45, 46, up around the 50 EMA and then roll back over. If it takes that out and continues higher, once it gets up around 50, I'm going to be more interested in shorting oil than going long oil. Okay, so that's a little bit about kind of how I'm seeing oil right now. In the ag market, well, now I'm starting to get interested in possible longs in corn and also longs in possible wheat. You can see we're down near all 2016 lows. I'm going to stand aside on soybeans. You can see soybeans is nowhere near its 2016 lows. But to me, I like corn and wheat to the long side a little bit better. All right, everybody, that's pretty much where we are for our members. I will see you tomorrow night in our weekly market watch coming up for the next week. I'll spend some time on our accordion flies, our broken super flies, and our broken baby flies. Other than that, I hope to see everybody next week in our next session update. By then, I should be in another country here, somewhere in Europe. Have a good weekend, everybody, and I will be in touch. Ciao.